Welcome to the Silent Trading channel. Today we'll be going through the gold chart to check and see if there are any suitable spot to be entering a trade by tomorrow, right? Or by Tuesday. But before we start, please subscribe, like, comment and share if you like this video and to support me in my trading journal. Today we'll go first by the weekly time frame or the weekly chart, right? To check and see if there are any suitable spot to be entering a trade. And as we can see on the weekly chart, there is a triangle, right, that we have drawn beforehand. That this triangle is going to be used to what? It's going to be used to sideway, right? Sideway up, sideway down, right? Moving it in its fashion and leaving traders trapped either below or above, right? Leaving buyers trapped above and leaving sellers trapped below, right? Buyers will be trapped above and sellers will be trapped below. This is how the triangle works, because by leaving sellers trapped below, the triangle is going to push up and come to the balance line or the middle of the triangle. And after coming back to the balance line, it will leave traders trapped below being pressured and then finally forced, right? And in the end, they'll be forced to close off their position no matter how much the loss is, right? And also leaving buyers trapped above. And when the chart comes back to the middle or the balance line, and after going on a sideway in a certain amount of time, buyers will be forced to close their position no matter how much the loss is, right? So this is how the market actually works, right? Shapes are not being drawn by the market. Shapes are not being drawn by the institution or the banks, right? Shapes are being drawn due to human behavior, right? Human psychology and human behavior, and their pattern of trading causes all of this pattern, causes all of this triangle, all of this sideway zoning, sideway range, right? Because why? When a chart starts to break above, people start follow buying or panic buying, so the chart will have to come back down. And when the chart breaks below, people panic selling, right? Retail traders are going into panic selling, so the chart will come back to the middle of the triangle, which means the chart is always looking to trap either traders or buyers in all specific spot, right? If there are more traders buying than selling, the chart will dump. And if there are more traders selling than buying, the chart will push up, the chart will spike, right? Because this is a true way of trading. The majority is never going to win. So we can see from an example of this chart, right? When you guys are panic buying, buyers from below, which is an institution, which is a bank, the hedge fund, or the capital, right? The big capital holder, they bought this low and they'll sell off this high. When the retail traders give them enough liquidity to dump, right? They're selling off at this high after retail traders inject liquidity into the market, right? They can't sell if there are no retail traders. So what they do, they release news of war, they release news of certain incident going to happen, right? And they release news of a certain thing that are going on beneath the surface, but actually there is nothing going on. But they release news to trick traders into believing that the gold is going to spike, the gold is going to expand further. And after releasing all of those news, and traders start buying on the market, start panic buying for fear of missing out, they then sell off all of their supply, right? Which means their supply being sell off over here and the chart dump, right? So now as we can see that the chart, the market right now, the current price is in the lower zone, the lower range of the triangle, right? The lower range of the triangle means this is still a specific spot that is suitable to buy, right? But not yet to sell, because even if we need to sell, we're going to be selling at the retracement or the next candle week retest, right? If there is no next candle week retest, we're not going to be selling, because if you're selling like this, This is what I call panic selling, right? Follow selling or panic selling. Okay. So what we need to do is we need to wait for the next week or tomorrow's chart, tomorrow's candle, to first thing first open. If you're going to be selling, for it to push up, right? For it to push up and retest. The first week retest is where we're going to be selling, because it is manipulation. And if the retest is just a retest just to form a wick but not attacking resistance, which means this is a manipulation, and after a manipulation happens, it is going to pull back and then start dumping, right? It is only going to spike if it start attacking resistance, because there are sell limits waiting at resistance, correct? There are sell limit waiting at resistance. There are people waiting to sell at resistance by market execution. So all we need to do is we wait for the chart to show us something. If it is showing us sufficient evidence, sufficient details and price action, we're going to be entering on the confirmation, right? So there also on the weekly chart, we know that this is still a spot to buy, right? Because the lower range of this triangle, right, is where we're going to be buying, and the high and the upper range of the triangle is where we're going to be selling. Because all of this is to what? Is to leave buyer's trap above and seller's trap below, which means if it is still in the lower zone of the triangle, the lower range of the triangle, we are going to be buying, not selling. Okay, so where do we buy? We couldn't even find a spot to buy on the weekly chart, because the weekly chart is moving in a fashion that it is trying to push down. So if you're going to be buying, we're going to be lowering down to the daily time frame to check and see if there are any suitable spots to be buying. No, there are no suitable spots to be buying on the daily time frame, because the daily time frame closed Friday by breaking support, but not yet breaking this bullish reversal or bullish key level support. But even so, if you're going to be buying on the daily time frame right now, it is not a good or a suitable spot to be buying. Because why? Because this candle is able to break this support, even though it has not break this support yet, but it has already attacked this support once. And attacking support once means the next time it attacks support, there are going to be more buyers being accumulated, and buyers being accumulated means the chart is going to dump. So if you're going to be buying, where is the spot that I'm going to be placing my buy limits? Over here, right? Past support, past a key level support, push down, forming a new low, right? Pushing down, pushing past previous candle support, a previous candle week, forming a new low, and this is where we're going to be placing our buy limits. If we manage to push down, attack our buy limit, trigger our buy limits, we got a buy position. And then if the chart is able to form a bullish price action, it is going to push up and start expanding. But if it is not going to push up and start expanding, and instead attack this support, the chart is going all the way down, right? And how much further down is it going to? It is at least going all the way down to where? If the next thing tomorrow's candle is doing, it is push up to manipulate, right? Push up to retest, right? If the next candle is push up for a week retest, the next time it pushes down, it is going to attack this support and push all the way down to this week, which means if it is going to dump after a manipulation by tomorrow, it is going to dump all the way down to here, which means how many hits of movement? About 40,000 points of movement. Now you see what the chart is trying to do, right? This is 40,000 points of movement. So 40,000 points of movement means a lot more traders is going to be liquidated, right? You're going to get their portfolio going into liquidation, which means liquidity is coming back into the market. And after all buyers are being liquidated, the chart maybe going to form a bullish price action over here, or either it may push up to retest, right? It may push up for a week to retest, and then start dumping down once more, and only after dumping down once more to take out all of the remaining buyers, right? All of the remaining or lingering buyers, and then start forming a bullish price action, retest, and then start expanding above, right? So all we need to do is we wait for a price action to show. If you're going to be selling tomorrow, you're going to be waiting for this week manipulation, this week retest, right? Not weekly, but a week to retest. If the next candle push up to form a wick first to retest while not attacking resistance, it has a chance of pulling back and then dumping. So if you're going to be waiting for it to dump, wait for it to dump, or it could dump and then form a bullish price action before you start selling. But if you're looking to sell, tomorrow's week retest is going to be a suitable spot for you to sell. And if the chart really suddenly dumps, it is going to be a big profit for you. Because why? Because it has a range of dumping all the way to at least here, about 10,000 pips or 10,000 points of movement. And if it is looking to dump all the way down, really down, if it is going to all the way here, it is a movement of about 40,000 points of movement, right? So no matter your profit is going to be here, your take profit is going to be here or here, it is still a big win for you, because here is 10,000 pips, right? Here is about 20,000 pips, and here is about 40,000 plus pips. So your profit depends on whether you can hold on all the way to down here, if it's really going to dump all the way here or not, right? If you only manage to hold on to here, that is your capability, or here, that is your capability. But if you're able to wait all the way down here, that is really an experienced trader's doing, right? So all we need to do right now is wait for the chart to show us something before we trade. And if you're looking at a 4-hour time frame, if tomorrow's 4-hour time frame is going to be expanding above first, right? If the price spikes above, right? If the price suddenly spikes above, it may be a spike to take out sellers, right? A spike to take out sellers before forming a bearish price action, and then retest and then dumping. And if it is able to form a bearish price action and push down to attack support, the next week retest is where we're going to be selling. And then if it really dumps, our sell position is going to be wait to profit at however much you want, right? If you want 5,000 points of profit, do it. If you want 10,000 points of profit, do it, if you're capable enough. Okay, so right now there is nothing to do except waiting for price to either spike above or dump below before you start buying, and spike above before you start selling, and form a bearish or bullish price action. Not just buy at spiking or a buy at dumping and sell at spiking, because averaging down means you're incurring more risk than necessary. Okay, so for today, that's all I'm going to be here for, and I'll be looking forward to seeing you guys tomorrow, and I'll be there to analyze the chart with you guys and say with you guys all the way down, as long as I'm teaching over here, as long as I'm guiding you guys. And I hope to see you guys tomorrow. So for today, see ya.